Accounting 2 tutoring session over chapter 14. This morning we're going to be discussing managerial accounting. So big picture, what we've been discussing in Principles of Accounting 1 and even the past couple of chapters in Accounting 2 is financial accounting. Financial accounting, if you look on page 755, financial accounting is used for external users. So if you're looking to invest in a company, or if you're a possible competitor with the company or things like that, you'll look at their financial statements to see how they're doing and things like that. Managerial accounting is more of an internal use. So you'll see on page 755 in the blue box that it's for internal users that are officers and managers. They're internal reports, and you make them as frequently as needed. With financial statements, they're done at the end of the accounting period or whenever you want to know how you're doing. The managerial accounting statements pertain to subunits of the business. They're detailed. They're standard as relevance to decisions, and there's no independent audit. So they're very much used, hence the name managerial accounting. They're used by managers to see how are we doing right now. And you'll notice this is chapter 14, and some of the ideas that we're going to talk about today are going to lead into chapter 15 and 16. So the next page I want you to look at is page 762. The big idea that you're dealing with managerial accounting is kind of cost accounting. If you're an accounting major, eventually you're going to have to take a class called cost accounting, and it's going to be expanding on what we're going to do in chapters 14, 15, and 16. So what we're dealing with are costs. Okay, so up to this point, we've been dealing with companies that purchase inventory and then sell that inventory. So places like Walmart or any retailer, basically. So now we are imagining that we're a manufacturing company, okay? And we're going to deal with how we're going to account for that with production costs and period costs, okay? So production costs or product costs are the same thing as manufacturing costs, okay? You'll see that above the three blue boxes on page 762. The three big areas underneath product costs, okay? And this is everything that goes into making an object, okay? So direct materials directly go into the item, okay? So if I'm making this book, okay, if the paper that goes into this book, that is a direct material, okay? Direct labor, if I'm on an assembly line, and let's say, I've never been at a book factory, but let's say I'm the one that binds the book, okay, so they hand me all the pages and I bind the book, okay? My direct labor is going into making the book, okay? So direct materials, the paper. Direct labor, me putting the bind on the book, okay? The third section is manufacturing overhead, and that is an end-all, everything else that has to do with a factory account, okay? So you'll notice under manufacturing overhead, you've got indirect materials, indirect labor, and other indirect costs, okay? So imagine that we have a machine that cuts our paper to fit the size that we want for this book, okay? And let's say that we put an oil on that machine to make sure it's working, okay? The oil on that machine doesn't directly go to making this book, but it's an indirect, I skipped indirect materials, but I'll go back. We skipped, I guess it could be both. We'll talk about both. So the oil that's on the machine, that's making the machine work, okay, it's not directly going into this book, but without that oil, it can't help me make the object, okay? Another example of this would be depreciation expense on a piece of equipment, okay? That's not necessarily going into the object, but it's a cost you have to account for. Let's imagine that I'm an assembly line worker still, and I have a supervisor that's making sure that I'm making the binds for the book. My supervisor would be indirect labor, okay? Another example of indirect materials is, let's say we put a little bit of glue on this bind, okay? And let's say the glue really isn't that expensive. So indirect materials are of little value or don't exactly go into the object itself. So glue actually goes in the object itself, but if it's such a small financial transaction, it can still be considered an indirect material. So the second thing we need to talk about, so we've got all of our costs, and we just discussed product cost, which is direct materials, direct labor, and manufacturing overhead. Period costs, as you'll see above the green boxes on page 762, are non-manufacturing costs, okay? So selling expenses, if we have an expense that we went and bought a billboard to advertise our business, okay, paying for that billboard has nothing to do with the factory or making the products that we're selling, okay? So the selling expenses could be like marketing, okay? It has nothing to do with product costs, making the product, okay? The other is administrative expenses, okay? So if we have a CEO, for example, and we're a corporation, you could follow the chain of command and say, well, the CEO has this subordinate and this subordinate and this subordinate, and then 20 down the row, it comes to be the assembly line worker. The administrative expenses aren't indirect labor, okay? You kind of have to think about who are the leaders dealing with, and then analyze it like that. So a CEO, for example, would be a period cost. His salary would be a period cost, okay? So you should be able to understand manufacturing costs and period costs, and then just the big idea of managerial accounting. So let's look ahead, and we are going to work on example 14.5. We're going to go through that just now and talk about it. Let me get to that page. And exercise 14.5 is on page 783. So in this, you need to be able to recognize the category in which it belongs for manufacturing cost. So whether it's a direct material, direct labor, manufacturing overhead, or just a period cost. Okay, so that's going to go over what we've done so far. Okay, so for the first one, it says property taxes on the factory building. Okay, if there are property taxes on the factory building, on the building itself, okay, that's having to deal with the factory. It's not direct materials and it's not direct labor, so it has to be manufacturing overhead, okay? So property taxes on the factory building are manufacturing overhead, okay? The second one is production superintendent's salaries, okay? Production superintendent's salaries, okay? So if we think about that, production's superintendent's salaries, okay? If a supervisor is taking over leadership over a production person, and then we're paying their salaries, it's an indirect labor, so it'd be manufacturing overhead. Okay. Memory boards and chips used in assembling computers. Okay. If we are making computers and we are putting a computer chip into the computer, that's a direct material. Okay. Depreciation on the factory equipment, okay. We discussed depreciation as being a manufacturing overhead because a manufacturing overhead cost because it's not direct materials and it's not direct labor. Salaries for assembly line quality control inspectors. This one I'm going to just go ahead and talk to you about the answer. It can be direct labor or manufacturing overhead with indirect labor. Assembly line quality control inspectors, we don't necessarily know how often they inspect or things like that, so that one can be either or, okay? Sales commissions paid to sell personal computers. So if we're paying sales commissions, we discussed that selling expenses have to do with period costs, okay? Electrical components used in assembling computers, okay? If we're using electrical components in computers, okay, that'll be a direct material because you're actually using the equipment into the product, okay. Wages of workers assembling computers, okay, that would be direct labor because the workers are actually putting in labor to make the computer, okay. Soldering materials used on factory assembly lines, okay. Soldering materials that we discussed, like a glue. A glue really isn't that expensive, so it's an insignificant cost. So yes, they're used on factory assembly lines, but the fact that they're probably not of high significant value, they're an indirect material. Okay. And number 10, salaries for the night security guards for the factory building. Okay. If the security guards weren't guarding the factory building, it would be a period cost. Okay. But the fact that they're guarding the factory building, that would be manufacturing overhead with indirect labor. Okay. So I hope that was helpful. Today we've discussed manufacturing costs, which are direct materials, direct labor, manufacturing overhead. We've talked about period costs, which are every other cost that have to do or that don't have to do with the factory. Okay. And we talked about managerial accounting, how it's used with internal users to see how you're doing. In the next video, it will be over chapter 15, and we'll do job process costing. And we'll talk more about that then. So I hope that was helpful.